Hey everyone, this is Josh Galvin and this is Bob Gibbs, and this is The Truth in the News, Episode 2. So today we're addressing a question that's been asked a lot recently about what's the impact of the U.S. Treasury selling mortgages. So first of all, let's give that some context and explain what does that exactly mean, what's the news saying about that, and what are they saying that it's going to affect the market, what's going on with that?
So basically the U.S. Treasury has been buying, it's called mortgage-backed securities. So really, in order to keep the economy from collapsing, when we had the downturn a couple of years ago, they got in the business of buying these securities. So they have about $142 billion worth of these loans that they need to get rid of. And so that's what
they're starting, and they're basically saying that they're selling them, meaning they're pulling the loans, selling them to investors.
Yeah, they're finding investors.
What are they saying that it's going to do to the market? So let's pretend right now if the government sold these loans, what would it do to the market, according to what the media is reporting and everything?
So what the media is reporting right now is they're kind of taking a glass half full perspective of it, and they're thinking that the real estate market is so tenuous right now that it's not going to take much to kind of push it over the edge and give us another dip in prices and a dip in the housing market.
So they're basically saying then, if the government, they're thinking it's a bad idea then. So they're saying if the government sells these mortgages or mortgage-backed securities, it's going to hurt the market.
That's correct.
And is that accurate?
No, I think they're overstating they're making it too negative, really, because what the government has done is they're going to be doing this over a long period of time. The government has spent a lot of money and effort trying to keep the economy up at a level where it's at today and try to move us to a point where we're kind of running on our own steam.
Yeah.
The government is comfortable that we are actually running on our own steam, and they want to start pulling out of the day-to-day operations of the economy. So
if they start doing that right now, it's not going to really we're not going to have nightmare tomorrow.
No, I don't believe that.
What would be a scenario that would make a nightmare happen tomorrow? What's the media saying? Why are they saying that? What's they actually saying that's going to cause this?
So what they're looking at is the February statistics for the housing market across the country, and it said sales are way off and prices are way off, and they're saying that's a sign that the housing market is still not very stable, and by doing this, it's just going to be one more thing that pushes it off the cliff.
Mm-hmm. Okay. And so then here in the East Bay, if I'm a buyer,
right,
and let's say I'm thinking, hey, I want to be in a home by June 1st.
Right.
How the heck does this? Should I even pay attention to this? Does it matter?
I wouldn't pay attention to it. I think it's a bunch of hoopla, actually.
Oh, okay. So it's just kind of if it bleeds, it leads. It's scaring me, and I want to read it. That's news.
That's right.
Okay.
Right. So the only thing you need to pay attention to is that interest rates are good right now, and there is going to be a time in the near future where interest rates are going to start going up. Inflation is going to start kicking in.
Yeah, the news even talked about this, well, not just inflation, but we'll get to that shortly. But with this topic of selling mortgages, they said this could maybe make interest rates rise. How so?
Because they have to make these mortgages. The U.S. Treasury has to make these mortgages appealing to buyers, and buyers are investors. So they're looking at a return on their money. So the only way they're going to get a good return is if they're buying these loans that have a high interest rate. And right now, interest rates are so low that they're just not attractive. So
then basically, here's a what-if scenario. If the U.S. government is, and I'm an investor, let's say I'm going to buy loans from the U.S. government, or the U.S. government is offering $10 billion, some kind of pool, and I look at what they're offering, and I'm like, I don't really like it.
Right.
What if loads of investors are saying that? That's when they're going to say we're going to have to raise the...
Yeah, they're going to have to get rid of them eventually, because the government wasn't set up to be in any kind of business. Mm-hmm. And right now they are. They're in the housing market. They're in everything. And they need to start pulling out of that. So they have to find a way to get rid of those. So that's the only danger with this. But it's still too early to see what's going to happen with that. I don't believe it's going to be that big of a deal. And in fact, they'll probably even slow the rollout of these even more if it looks like it's creating an issue.
Okay. So then, at the end of the day, after all said and done, what does it matter to a buyer or seller looking to buy in the next 30, 60 days here in the East Bay? Yeah, what's it even matter?
I wouldn't even pay attention to this stuff too much. I would pay more attention to what your specific market is doing, and look at where you're at today. I mean, we have interest rates that are really low. We have prices that are actually going up in the whole East Bay.
A lot of buyers and sellers don't trust the good news.
Yeah.
So what would you say to them? Because there is, it's valid.
I don't believe them. I don't trust those.
I don't trust. It's hard to trust the good news. It's hard to trust the bad news.
Yeah.
So how the heck do they decipher the good news that you're sharing with, and then the bad news? What do they do?
You have to look at the real data. Okay, the real data says that home prices in San Ramon were median price is $700,000 in January, $725,000 in February, $760,000 in March. To me, that doesn't sound like a market that's declining.
Yeah, exactly.
That's real data. I mean, I didn't make it up.
Definitely, there's got to be a seller that's out there thinking, well, if I sell then I should wait till my home goes. Let's say the seller's like, oh, should I wait until summer then? Because if prices are going up, I'd probably better selling when it's more expensive. Is that smart?
No, because the reason that's a good question. The reason is that interest rates are very low. Not interest rates. Well, interest rates are low. Inventory is extremely low right now. I mean, we're about 60% of where we were 3 months ago.
So then the numbers you just gave for the past 3 months, you know how you said it's been rising. That's been due to the inventory.
Yep, that's in my opinion.
Meaning less homes in the market.
Less homes in the market and high demand.
Same amount of buyers. Makes home prices go up.
That's right.
Okay,
that's pure economics.
So then what's going to change that?
So what's going to change that is the seasonality of real estate. You're going to see the market actually heats up over the summer months. So second quarter, third quarter, there's going to be more inventory coming on the market. Not foreclosures like everyone's talking about, just normal inventory, people wanting to buy and sell.
Okay, so I guess that's pretty much it. So in a nutshell, if you had to summarize the impact of the U.S. Treasury selling mortgages on buying or selling today or tomorrow, what would you say? Another quick nutshell. Don't
pay attention to it. It's too early to tell if there's going to be any impact at all.
Okay, cool. So again, don't get scared by everything you read.
Yeah.
Take care.